Hello traders, welcome back to the Forex channel. Before we start this video, I just want to mention the quality of the video on this webcam bit will be a bit lower because I'm actually just using the webcam on my PC rather than my camera. So yeah, just doing a quick video today to go through an easy strategy, which I know a lot of people that I've taught this to have found it very useful. I have done a video based on this strategy before, but I'm going to advance it in this video to show you how to use it more effectively, so you can maximize your profit using this strategy. I haven't actually done a strategy video in a while, so this is going to be a good one and hopefully you guys enjoy it. So we're going to go over to the chart now and I'm going to take you through the strategy. And this works on pretty much any pair, but the pairs I like to use it on specifically are gold and GBPAUD. Psychological levels happen on pretty much any pair. On GA you have 1.85, 1.855, 1.86. That's the sort of levels we're looking to trade from. And obviously on gold you have the areas like 1800, you have 1750, you have 1700 and areas like that. Obviously some other pairs as well. You know, EU you've got 1.5, you've got 1.55, you've got 1.6. These sort of levels. GJ we've obviously got 153, 153.50, 154, 155, those sort of things. GU we have got 1.36, 1.35, that sort of level. But I'm going to show you examples on GA because this is where I found it is actually the best. So what we actually do is we zoom in and we have a look. You know, these levels you can just mark them out and just leave them on the chart. So that's what we're going to do. So coordinates, we're going to do 1.85 on this one, and then we're going to add another one, change the coordinates, 1.86. If we add another one, 1.87. So you could just leave these on your charts the whole time, but as you see straight away, where does price come into? Price comes into the 1.86 level. A lot of the times you'll see actually price come into these levels, but you don't just want to buy as soon as it hits a level. You want some sort of other confluence first before we actually start buying. You know, you can look back, maybe go on a different time frame, this sort of thing. So you see, back here, what do we have? We have this imbalance area. If we go across, it's yet to actually be filled even 50%. And if we actually look here, price came down and filled 50% the imbalance. So this is another confluence to actually buy at this level. So say price comes down to here, you look, all right, we've got multiple rejections of this level, you buy. So stop loss on this one, you can have a really tight stop loss, you know, just below this wick here, because if we break below, then we are going to continue lower below this level. And you know, where could you target? You could target order block here. The order block here has already been filled, so we're no longer looking at this one here. So this area here could be our target, and if we target the top of that, as you see, 1 to 7 hit perfectly. What you can also do is have targets like this. So your first target could be 1.865. So you got 1.86502 here. We could change that to exactly the 1.85 like that. So we have that there, and you've got 1 to 6. At this level, you could either roll your stops, you could take some partials, maybe move your stop loss into profit or even at break even, and move your second target to the next psychological level. So this level here, the 1.865 was actually hit, so you would have made a nice 1 to 6. However, the 1.87 target wouldn't have been hit. So, you know, that's why a lot of traders go wrong. They're in trades, they're up 6%, 7%. Take some profits. Take some profits along the way in each of your trades. And it's just the best way to build up your account. Because if you're going winning trades like 6-7% in profit, and then you're just letting it go to stop loss or letting it go to break even, then what's the point in making all that analysis to make 6 or 7% on the trade? You want to at least take something back from the markets that you've obviously earned. And as you see then, price came down, crashing through, and we did retest this 1.86 level here. And when I say this 1.86 level, I don't mean just this exact line here. You have like this area. So you'll see a lot of times it'll come close into the area and then make the move. And as you see here, we had price reject the level where we would have bought from, and you've got a break, retest, and also it has filled the fair value gap. So if you're a long-term subscriber on the channel, you know that I used to draw my imbalances from wick to wick. So on this here, I used to draw it from the wick there to the wick there. So that would be my fair value gap. And obviously that gets filled, you buy, price goes up. That sort of thing. However, here, you see we've got this imbalance. But if you're looking at fair value gap terms, we've pretty much filled the full thing. And this is almost 50%, I'd say around 50% fill of this candle here. So you've got the imbalance fill. You've also kind of filled the fair value gap. And we do have a break and a retest of the 1.86 level on GA. So you could even get an entry off this here. You know, where do you put your stop loss? You put it just above the high of this candle here, because if price wants to come up, we're likely to come up to this order block or fill the full imbalance area. And where do you target? You probably guessed it, 1.85. You'd have your first target at around here, so 1.855. Nice psychological round number once again. You always want to be targeting these round numbers, because obviously that's what you see the price goes to, and you'll see that on gold in a minute when I show examples on there. But here, a nice 1 to 8 risk to reward. If you trade from like 1.86 to 1.85 and your trade hits the TP, that's 100 pips. Say price carries on below this level, then obviously you target the 1.84 level. You could continue rolling your stops further into profit, and then you just will win many trades. I show you some other examples here as well. If we have a look, okay, so this time we're going to add some more confluences in. So as you see, we are around the 1.89 level, so we want to get rid of that, go to 1.89, and as you see, so prices come up, hasn't managed to reach the 1.8, hasn't managed to reach the 1.9 level, so then we obviously look for the closest level, and that is 1.89. So we broke below 1.89, leaving this huge imbalance candle here. So if we actually mark off this imbalance here, you can see the price came down, and what does price have to do? It has to come back to test the level and also fill the imbalance which is left behind. So probably price came back, tested the imbalance. If you look, the top of the imbalance was tested to the pip, and we also had 2 taps into the 1.89. So they're the extra confluences we have. Stop loss, you can have a very tight stop loss on this, just above this level here, these 2 candles. You could say that is an order block, because this order block here was actually filled. And where would you target? You would target 1.88. 1.88, there we go. So 1 to 13. However, remember I said that when we get the 1.88 level drawn out, that you can roll your stops. So now, this stop loss or this entry was never actually hit again, and you could have rolled your stops down to the 1.87 level, and when it breaks below the 1.87, you can move your stop loss further down. So all the time the trade's continuing to go to the downside, your stop loss can be moved into profit, into profit, into profit, into profit, and it just obviously minimizes your losing trades, so you will never actually get taken out of break even. You'll be taken out in profit every time if the trade goes back to the opposite direction of your trade, and you could have rolled the stop again or targeted this level, which would have actually been hit. You could have targeted the next level down, and if you're just keeping the trade open, rolling the stops all the time, then you know instead of making 13%, you've made 53% on this trade, and during the trade you've managed to, as you see here, get a scale in. You've managed to buy here as well, catch the move up, another 7%, another 8% here, 53% here. Obviously you would have taken partials along the way, it wouldn't actually been 53% unless you are crazy. But you see, just from trading from zone to zone to zone to zone, you've made 400 pips on this one, 100 pips on this one. And you know, a very, very easy method on pretty much how to trade. Obviously around these areas we'll see a lot of manipulation happen. So as you see down here, we're around the 1.86 level. You see these massive wicks, and price kind of consolidates around these levels. You'll probably see this better on the higher time frames. Yeah, so when price is around these levels, as you see, we have a lot of consolidation and indecisiveness before we actually make the move. If we look back at these levels, you can see, you know, they trade off of them absolutely perfectly. So you have this area here, which is the 1.85. 1.85 sold down to the 1.83 level. TP would have been hit 200 pips. You could have bought off this level. Price came back, tested the order block, gone up, retested the 1.85 level, filled the imbalance, and you know, you could have called the buys up. So very, very simple method. And another perfect example which is happening right now on gold. Look at this. So we've actually got the 1800 level, which is a key level on gold, and as you can probably see, 1, 2, 3 rejections of the level, and then we dropped. So if you're actually getting entries off this, you can have proper tight stop losses, because you know that if price breaks these levels, then we are on the way to the next psychological level. But obviously be careful for manipulation. So right now you'd be up 4%, but for targets, you know, you could target this imbalance fill here, or even the one down here. But I'd personally be targeting a lot further down, like this level here, where we've actually came back, hopefully coming back to test this level to look for to go higher on gold. But obviously we'll just see how gold goes, and I don't really like to trade in London session, so we'll see how gold reacts to these sort of levels. So yeah, I hope this video did help everyone that is learning how to trade. Just add this to your trading maybe if you found it useful. Have these levels marked out for either take profit levels, areas of interest, where you can actually look to target or trade from. So if you did enjoy, like and subscribe, and I'll see you in the next video.